Hello, welcome, and it's Wednesday already. Can you believe it? Let's whiz me up into the corner, as Ian, the local weatherman, says. Contractor. Contractor's Guide to Contractor? That doesn't make any sense. Who made these slides? Anyway, you can never have enough insurance. As anyone that's seen Groundhog Day will know. There's Ned Ryerson, and there's Bill's character. Insurance. Lots of it. But why am I talking about insurance? Why do contractors need insurance? What is the deal here? Contractors, do they need insurance? What insurance do they need? Have you ever even thought about contractors having insurance? As having a limited company, there's lots of things that you can have insurance, as key man and stuff like that. We're not going to talk about that. So, we're going to be talking about PL. What's that? EL. Something else. And PI. Interesting stuff. So, public liability, PL. This is where you accidentally harm somebody who's a member of the public as part of your normal, workings and stuff. Now, I did ask my team how or what sort of circumstances this might happen, especially if you're working on a customer site. But thinking about it, it could be like, you open a door and there's somebody the other side of it you didn't see, and you somehow, injure them because they're carrying something sharp and they managed to stab themselves because you've opened a door on them. I don't know. It's a bit far-fetched, I suppose, but could happen. And insurance is all about something that could happen, no matter what the risk is. There's always a risk. So public liability, this will cover, in the case of something unfortunate like that happening, stuff like the legal fees and the compensation costs, which is kind of useful, I suppose. But like I say, we kind of struggled to think of scenarios where public liability would be a thing. But if a member of the public is harmed during the course of you carrying out your duty or work, I think is what the phrase is. So, employer liability. This is something else that's a thing, and it's a legal requirement if you're running a company. In fact, according to the Compulsory Insurance Act 1969, and it's been amended a lot since then, you can be fined £2,500 a day if you don't have employer liability. And this is if an employee is injured or becomes ill whilst working for you. Again, this poor person might be behind a wall and they're carrying some pencils, and they hurt themselves with the pencils or something like that because they were working for you and they were just rather clumsy. Or, I don't know. If you can think of some other scenarios, put them in the comments. That would be great, because we really do struggle as opposed to what these situations could be. Anyway, it's quite normal that there's a £5 million cover. I dare say you could talk to a broker and get that value tweaked a little bit, but it's not very much as part of the premium, and I'll get onto what the premium is in a little while. But the great thing here is that you don't need this. That legal requirement goes away if your employees are family. And this means, and obviously they've specified what family is in the legal act because, lots of words. Husband, wife, civil partner, father, mother, grandfather, grandmother, stepfather, stepmother, son, daughter, grandson, granddaughter, stepson, stepdaughter, brother, sister, half-brother or half-sister. So if your employees are any of those, then it's not compulsory, which is a bit odd. But if you're hiring somebody who isn't family, then you need it. Like I said, it doesn't really cost very much. It's included anyway, because it's a legal requirement, so it's easier for the brokers to include it than to exclude it. And employer liability. There you go. Okay, so professional indemnity, what is it? Claims for loss or damage if a result of negligent services you provided or advice you offered. So if somebody follows your advice and something really bad happens, then they can sue you for it. As a software developer myself, I am liable to any service that my software provides because it goes through that step. And I'm also liable if I give any advice to my customers based on my knowledge of software. So it is required if you're in a regulated industry. So if you're a solicitor, an accountant, architect, chartered surveyors, or financial advisors, then it is required because your, what do they call it? Your association, so the Association of Chartered Surveyors or whatever that is, the solicitors bar thingamabobs and the accountants chartered this, that and the other. Part of being a membership of that body, they will say it's required that you have this PI insurance because you don't want to bring the whole class of that profession into ill repute either. But it is kind of required somewhat, if not advisory, in a number of other capacities. So if you're an estate agent, it's probably a good idea to have it as part of that work, even though it's not strictly required, because somebody could sue you based on the advice or the services. And software development is no different. It's not required as such, but it is advisable to have. But if you offer knowledge, skills and advice, you should have this insurance, because you offer somebody advice and then they come back to you and they say, I followed your advice and something really bad happened. I'm going to sue you for £5 million. Then that would be a bit of a bind if they won that contract or that lawsuit, right? And so how much should the level of cover be? Well, as an IT contractor, it's actually in the contract that I've signed. So this is a little screenshot there of my contract that I'm running with currently, and it says insurance required, professional indemnity insurance, minimum of £1 million, and any other insurance policies the subcontractor is required to maintain under applicable law. So that's alluding to the public liability and the employer liability. In terms of contracts I've ever held, it tends to be between 1 and 5 million. Depends on, I suppose, who the end customer is and whatever their requirements are. After all, as a contractor, you'll have a contract with a company. It's very rarely the end client, although that is possible. There's usually a middleman in the middle that looks after your timesheets and does the sales and all that sort of stuff, We're interested in getting the contract. We're not necessarily interested in selling the service as a whole, as a salesman and all that sort of stuff. So I work with other companies and agencies who will, if you like, sell my services, and then I sell myself to the agencies. But there's a bunch of benefits. So one agency I could talk about is Equal Experts. I have a contract with Equal Experts. Equal Experts then have a contract with their customers. They have a number of customers, and the benefit that gives me is their teams have a lot of experience in setting up teams of a contract. So digital transformation is their main service that they sell. They then sell that to bigger companies, and then they essentially subcontract the delivery of that out to contractors. And so that means we can focus on what we're really good at, which is fixing technical problems, and they can focus on what they're really good at, which is looking after contractors and selling the contracts in the first place. Anyway, off-piste slightly. So level of cover, 1 million to 5 million is usually about right, but this is only in the UK. I mention that because the insurance company will ask a number of things about you so that they know what level of risk they are insuring, because it's all about insuring level of risk. In car insurance, if you're only just passed your driving test, you're statistically more likely to have a car accident. Therefore, the insurance company sees you as a bigger risk, and so they charge you more. The same is for professional indemnity insurance, where if you're in certain industries are a bit more litigious, more suing happens, they have more claims, and therefore it's more risky. So in roles, this also comes across as well. So if you say you're an IT developer, that has a lower level of risk than if you say you're an IT consultant, because a consultant can have a wider range of advice versus a developer. So when you ask for your insurance, the role that you put down is important. Now, I don't know many people that have actually had this claimed against them, but as it's in the contract, we have to have it anyway. But specifying the wrong role might also invalidate your insurance, so be cautious. Different roles have a different risk and therefore different premiums. And then there's the USA and Canada, kind of. They are not allowed to put a limit on the risk. So somewhere else in the contract, it will say, I am liable, or rather the company is liable, because the contract is between company and company. So it will say my company is liable up to a limit of, in this case, £1 million. Under US contract law, you can't put that limit in there. You are liable or you're not liable, and you can't put a cap on it. So with a larger liability, you're not talking 1 million or 5 million, you're talking an unlimited millions. Now, there is case law where there's kind of a rough guide. Like I said, I don't know many people that have actually had it claimed against them, so the risk is still small in that regards. But it does mean that if you want to work in the US as a contractor, you can't have that limitation, so you're going to be paying more for your premium. This means, in our sense, in the UK, where I'm operating in the UK, I've got a contract in the UK, therefore I only expect my customers to be UK based. This means I can say to my broker, I'd like professional indemnity worldwide, apart from the USA, because I'm never going to work in the USA. And because that exclusion's in there, it's a little bit cheaper. Well, I say a little bit, it's actually quite a lot. I did ask. Anyways, watch out at the time of the claim. Now, this is also another gotcha. When you're changing insurers or retiring, what you need is a sort of a run-off policy. What does that mean? So, new claims can be brought against you for up to 6 years after the service or advice was delivered. What this actually means is you need to be insured at the point of the claim, not the point of when the delivery occurred. So to put it another way, you did something 5 years ago, you had PI covering you for that year 5 years ago. This year somebody comes up and they says, actually, I followed your advice, something really bad happened, I'm going to sue you. You need to be insured this year for that claim, even though you were insured in the past when it occurred. So this is what I mean by a run-off policy. So a run-off policy will say, yes, we'll still cover you for the stuff you did 6 years ago. And okay, it's a smaller premium because it happened 6 years ago, therefore it's less likely to be acted upon, but it could still happen. And this is the same for when you change an insurer. So when you change insurers, you have to make sure that your new insurance policy, your new insurer, will either cover the claims that happen before they are insuring you, which they aren't at liberty to do. They're just there to cover the claims now and the instance now. So it gets a bit confusing. So you might need to buy a run-off policy with your old insurance company in order to cover the old time that you were operating. I hope that makes sense. If I can make it clearer, ask questions in the comments, and I'll attempt to answer those questions. Anyway, the point is, once you've got PI, you need to make sure you continue having PI in one way or another. Unless you stop doing any work for 6 years, and then you're clear. Cool. So, where do you get this insurance from? I've mentioned insurance brokers a lot, and you can find where they're all listed. If they're any good, they'll be listed as part of the British Insurance Brokers Association. There is the website. I suppose it'd be handy to put that in the comments for you. I'll do that in a bit. And they'll all be listed on there. None of the insurance brokers have offered to give me any money, so I'm not singling any of them out for recommendation. And my current insurers, I don't want to tell you who they are either. So there's a list. Go find a recommendation. That might change. We'll see. Great. So, choices in the contract. Are you ready to be a contractor? Now you know a little bit about insurance that you need. That's just one of the things that we cover. If you go onto this website here, devopscontractor.scorerapp.com, it'll take you through a quiz where I'll ask you a bunch of whole questions on all range of subjects that you need to know as a contractor. Because I will help you become a contractor if that's the sort of thing that you choose to do. And we can help you gain all these benefits of being a contractor: flexibility, high demand, lucrative earnings, and learning opportunities. So the quiz will help you assess your skills, identify your strengths, and enable you to get tailored advice from me about where you should go to become a contractor. Sounds awesome. Let's get on it. And any questions and stuff, bung them in the comments, and I'll come back to them. And thanks for watching my ramblings once again.